There are subsidies this week. According to the CEO at the NNPC, the sovereign debt note has been released, and they're looking for approval from the National Assembly. Today is Wednesday. Perhaps they'll get their money in 72 hours. According to the NNPC CEO, part of the problems for the scarcity we've found ourselves in for the last couple of weeks was because of the unpaid subsidies. There was also some good news there that the foreign exchange differentials of the subsidies will also be paid to the marketers. These were calming nerve statements from the National Oil Corporation. Meanwhile, another forward-looking statement was that 26 oil cargoes are expected in Nigeria to deliver the critical petrol products to the country this month to ease scarcity as we get into the long holiday and festive season. Let's bring on Jubril Karim, who is an energy analyst at Ecobank Development Corporation. He's joining us via Skype from Victoria Island in Lagos. Karim, good morning. Thank you very much for joining us.
Thank you for having me, Bosin.
Are you comforted by those statements from the NNPC, starting from the National Assembly, I beg your pardon, the subsidies approval, the forward payment, forward approval of 108 billion, the fact that we have more oil vessels coming in, and that this week the oil marketers may get paid?
Okay, I think there's a bit of good news and bad news from that. The bad news is that this is coming at the third quarter of the year, which means outstanding subsidy payment from the beginning of the year up until the third quarter of the year, amounting to about 413 billion, have just been approved. For the oil and gas company, obviously that's not a good thing for their operation, because it means a lot of them are now being exposed to high financial charges due to borrowing that they've used to cover that position. But in the good news aspect of it is that 109 billion has been approved for the fourth quarter of the year. And I think even much more better is that I think the Senate has made a provision for any significant rally in oil price that we might likely to record during the fourth quarter. Because if you look at it, taking a conservative 30 million barrels daily consumption, and as of today, from the PPRA template, subsidy on PMS is about 13 naira. So that for the 90 days in the third quarter, that amounts to about 36 billion. Of course, we still have kerosene subsidy at about 51 naira per liter. So all put together, we are looking at a figure that is significantly lower than the 109 billion that was approved for the fourth quarter. So which means there is a provision. Should there be any rally in oil price, there is already a provision for it to be absorbed into it. And that's the good aspect of the approval from the Senate.
So we should say thank you to the National Assembly for being forward-looking when it comes to this. We haven't seen it before.
Well, it has never been the case. It's always the case of the petroleum marketers fighting for outstanding payment. So this is a quite impressive one, and it's even coming from the Senate, because the presidency actually requested for 413 billion, which is for outstanding payment up to the end of September, and they decided that to make sure that till the end of the year we don't come back to the table again for another subsidy issue, they added the 109 billion. And I think that's if we continue on this path going forward, that would be a very good way to go by it, rather than waiting to the period where the subsidy has accrued to a very huge amount and the marketers have to engage in the issue of either holding or not importing products to sell to the masses.
Okay, let's come a little bit to the other side of it about when these folks will get paid. You will talk about the foreign exchange there. As soon as money leaves, a bank signs off on a loan facility for you, the liability is on you. They fold their hands and they're waiting for you to pay them back, and that means the interest has been going high. They've been looking at this cost. They have to pay staff. They got to do a lot of other things since the start of the year. The foreign exchange composition of that outstanding subsidies would be paid, but look at the dollar behavior since the start of the year, with everything, with the naira as well. Naira-dollar parity since the beginning of the year. Looks like, well, you're paying us now, but, well, thank you, but no thanks.
I think to look at it, first of all, if you look at the performance of the companies that are publicly listed in the oil and gas sector, this issue is very obvious in their performance. You see a significant increase in interest expense, which shows that they are now being much more exposed to borrowing from banks. And on the foreign exchange side of it, I think there was a huge disagreement between the government and these marketers earlier in the year, and that was eventually resolved because the PPPRA, that is the Petroleum Pricing Regulatory Body, was actually using the CBN rates to compute the to compute their prices of landing cost of petrol, while most of the marketers were not even getting access to all the official exchange rates, and they have to resort to some of the rates that are much more higher than that. The government has eventually agreed to pay them that amount, and even at some point, the PPRA template was using an exchange rate that was even lower than the official exchange rate of the CBN. So all these now have been resolved, and these amounts will be paid to marketers. But in terms of payments, a sovereign debt, I think a sovereign debt note will then be issued to the marketers. That then again is another issue. Sovereign debt notes conversion to cash, that takes another period again.
Okay, so where are they going to take the SDN? Where they're going to take it to the banks, EcoBank, for example. So who's going to get? When are they going to get paid? So if they get the sovereign debt notes today, well, would it come to cash before Friday? Is it likely?
That doesn't lie with any commercial bank. No commercial. It lies directly with the CBN. The CBN, they've been issued a sovereign debt note. It's for the CBN to then give directives on the payment. It's not for any commercial bank to convert the sovereign debt note into cash. So it's only the CBN have the utmost right on conversion of that. So it doesn't lie with, and I can't give a time frame because in the past, when the subsidy has been in place, it usually takes a period of sometimes as long as a month or even longer. So yes, this is a good move, but until that cash payment comes in and these companies are able to cover their position in terms of debt exposure, we might not see the willingness to continue to import products. So all that have to be fast-tracked. The CBN have to also come on board and make sure that those sovereign debt notes are actually being converted to cash.
So that means that we shouldn't be quick to think that this huge money would flow into the banking system anytime soon.
Eventually, it will get to the banking system, but I don't really think the sovereign debt note is a true representation of the cash position that the cash inflow that will be coming to the bank at this point, until that conversion has been made.
Very interesting story. So still the story we need to watch, and you guys, energy analysts, are the ones who are keeping a permanent eye on that for us. Thank you very much. We appreciate your time.
Thank you for having me.
Thank you. I appreciate it. Jubril Karim, energy analyst at EcoBank Development Corporation. We'll come back after the break. The story about the rate of corruption in Africa was released on Monday by Transparency International. If you have gone through this report, quite a number of institutions were named as being responsible for the increase in corruption on the continent. We'll talk to this a little bit. Who is involved and why is it difficult to track corruption?